Welcome back to Explain the Charts, where we break down the markets for you. Today, February 19th, 2025, we're tackling USDCHF, the US dollar versus the Swiss franc. Recent news indicates a continued bounce off last week's lows, with the USDCHF price hovering above the 100-hour moving average. Let's begin by examining the daily chart of USDCHF. We can observe a recent price increase, suggesting bullish momentum. The price is currently above the 100-hour moving average, indicating short-term upward pressure. However, longer-term trends need to be investigated. Let's move to a shorter timeframe chart to further this analysis. The 1-hour chart offers a more granular view of recent price action. We see several instances of candlestick formations that offer insights into the prevailing market sentiment, as well as possible support and resistance levels. For example, a potential support level can be identified based on a previous swing low. Now, let's see if these patterns hold on the even shorter-term 15-minute chart. Zooming into the 15-minute chart for USDCHF, we can see a series of smaller price fluctuations. We can also see a slightly different picture compared to the hourly and daily charts. Looking closely, several candlestick patterns reveal short-term buying or selling pressure. These micro-patterns can be helpful in identifying potential short-term trading opportunities. Let's analyze a specific period on the 1-hour chart from 1,738,206,000,000 milliseconds to 1,738,677,600,000 milliseconds. During this period, it is clear that the USDCHF displayed some significant price movement. This range shows a clear trend and patterns that were not as clear on longer time frames. Now, let's bring it all together. On the daily chart, we see a longer-term upward trend. However, we must note the volatility. The 1-hour chart reveals some short-term support and resistance levels that are more indicative of recent price movement. The 15-minute chart illustrates the extreme volatility that one must account for in trading decisions. Combining this information, and by observing volume in each time frame, one can form their bias. In summary, key price levels to watch are those identified on the 1-hour chart within the previously noted time frame, as well as several other potential swing lows and highs identified on the daily chart. These key levels could reinforce bullish or bearish trends, particularly if accompanied by high volume. Keep a close eye on these levels, volume, and patterns, especially any upcoming candlestick formations. It's important to remember that all predictions have inherent uncertainties. It's important to always have a trading strategy and plan.